Let's get some more on how bond markets fared too during the session. And we're joined now by Simon Michell from FIIG Securities. Simon, I just wanted to ask you, because it certainly set the European markets alight, this hope of peace talks actually coming to some kind of deal between Russia and Ukraine. But then it was certainly very choppy in the US. How did the bond markets fare?
Yeah, good morning, Brady. Bond markets are generally stronger, I should say weaker. Rates are up, and that reflects essentially, I think, a little bit more clarification over, obviously, the talk about ceasefire was positive because markets had sort of shied away, and we'd seen significant improvement in bond markets as people sought the safety of bonds. So, I think as they saw some news out of that, we saw some money move out of the safety of bonds and into some other markets. That was obviously reflected in the equity market. Pulled back a little bit, but look, bond markets were still pretty much weaker on the close as well.
How have Australian bonds been faring after the GDP came in better than expected yesterday?
Yes, absolutely. So we've had that GDP in better than expected, still on a bit of a downward trend there, and the RBA's recently downgraded their forecast for growth as well. So, in that context, I think the market was pretty happy with the release. We also had comments by the RBA governor who basically took off the agenda any possible easing to monetary policy, and he noted that the housing market is quite strong at the moment. He didn't really want to lower borrowing costs any further, for fears of what that might do to the housing market. So, I think those two things certainly put a bit of pressure on for higher yields in Australia, and we've certainly seen that.
Just on what the ECB might do tonight. I mean, there's a lot of expectations building into this. What do you think we could get?
Yeah, look, it's interesting. I think the pressure's still on. I mean, we've seen some very soft manufacturing data out of Europe as well overnight. So, I think the commentary's really moved from really or won't he to if he does, what will that be? And, will we see changes to interest rate settings? A lot of talk about an asset purchasing program, essentially buying bonds, whether they'll add that to the stimulus. They've so far resisted that move. So it does give him one further tool to use over there. But now the talk's about whether we might see some changes to interest rate settings. Very, very low. They were last changed in May. Will he use that as well? Does he feel under that much pressure? Interestingly, with the developments in Russia-Ukraine overnight, you've got that playing into it as well. So, definitely quite uncertain over in Europe at the moment. All eyes on the ECB. Likely to be a quiet day today, actually, as the market awaits the decisions coming out of Europe.
Thank you so much for that, Simon.
Have a good day, Brady.
You too. Simon Michell there from FIIG Securities.